I have a tagline that says, all I do is bring 25 years of mistakes. That's kind of one of my things. The trader has to stay humble and stay willing to kind of open to new ideas. And that's ultimately, though, why I was attracted to MMT, because I feel like I'm not burdened by these beliefs that I know all the answers. And when I stumbled upon these people that actually, pretty obvious to me, proved that they had all the answers and explained what I was seeing in the markets, it was just such an attractive proposition that I couldn't help myself.
This is the MMT podcast with Patricia and Christian Riley. Hi, I'm Christian Riley and welcome to the Modern Monetary Theory podcast. You can find us on Twitter at MMT Podcast, and you can support the show by going to patreon.com/MMT Podcast. For as little as $1 a month, you can get early access to all our episodes and patron-only episodes. A big thank you to all our supporters so far. At the beginning there, you heard our guest this week, market strategist and author of the Macro Tourist Daily Letter, Kevin Muir. This is part 2 of our conversation with him. Part 1 was last week. Hope you've had time to catch up with that. If you're new to MMT, the reason that some market practitioners like Kevin find it useful is that the descriptive part of MMT is an objective analysis of how modern money systems work, what happens on the balance sheet of a nation when the government spends and what happens when it taxes. Now, we all have our ideas about how real wealth, real goods and services should be distributed, and that should be debated, and that's what politics should be about, in my opinion. But what shouldn't be up for debate is whether or not currency issuing governments like, say, the UK, the US, Japan, Canada, Australia can run out of their own money, because they can't. Some of the characteristics of the way money comes into being, the way it moves through an economy and the way it exits an economy have been remarkably similar the world over for quite a long time. As John Maynard Keynes once put it, all modern states have had the ability to decide what is money and what is not for at least 4,000 years. So what makes money money? The MMT money story goes like this. A state desires to provision itself. It needs roads, bridges, soldiers, hospitals, schools, infrastructure, a health system, an education system, you name it. But to achieve these things, it needs to be able to hire people and buy resources. But why would anybody want to work for intrinsically worthless pieces of paper? The way Hyman Minsky said it, anyone can create money, but the problem lies in getting it accepted. So how do you make people accept your money? How do you get them to value your bits of paper enough to work for them? So the way sovereign governments do it is through taxation. A monetarily sovereign government presents each individual under its authority with a tax bill payable only in the state's chosen unit of account. In the UK, that unit is called the British pound, and only pounds will settle tax obligations to the state. So the tax bill creates people needing to earn the government's currency. The government can then spend its otherwise worthless bits of paper to hire people and buy resources. So a £5 note is a promise to pay off £5 of your tax bill. It's a £5 tax credit. Because of this, it circulates as currency. Because all citizens need to pay taxes and only the government's designated tokens are acceptable for payment, so a permanent demand for pounds or dollars or yen, depending on where you live, is created by this need to pay taxes. This framework for understanding what drives money is called chartalism, and you can find it cropping up in the writings of economists all the way back to Adam Smith. When governments spend more money into existence than they tax back, when they run a deficit, that deficit is the private sector's surplus. Government spending is private sector income. It's our money. Because this isn't widely understood by the public, politicians score own goal after own goal by equating government spending with household spending and accusing their political rivals of being immoral for increasing the government's so-called debt. Now, debt for a currency-issuing government, a government that can issue at will without limit the very thing it needs to pay off its so-called debt, is very different to when you or I go into debt. The national debt is the sum total of all the government deficits ran since the inception of the currency. So by definition, it's also the sum total of all the private sector surpluses ran since the inception of the currency. As MMT founder Warren Mosler describes it, the national debt is nothing more than the pounds spent into existence that haven't yet been used to pay taxes. And as lead MMT academic Professor L. Randall Wray puts it, the national debt is not what we owe, it's what we own. Public misunderstanding of this leads politicians of all persuasions into vowing to cut deficits, even as unemployment rises and public goods and services go underfunded. They reduce the deficit, which reduces the money circulating in the private sector. Spending goes down. Somebody's spending is somebody else's income, so income goes down. The economic downturn deepens. Unemployment rises. Public infrastructure crumbles, and politicians blame the bad economy on the deficit. Then they vow to reduce it even more. The government acts pro-cyclically when it should be acting counter-cyclically. How do we change this destructive path? Because politicians have to play to the public mindset, MMT scholars and activists since the 1990s have been engaged in an effort to change public understanding about the way modern money systems work. My own personal feeling is that I'd like political fights to get back to arguing about what the public interest actually is. My suggestions are not destroying the environment and not letting people die of poverty. I'd also like us to get back to arguing about what should be provisioned by government and what should be provisioned by the private sector, rather than having arguments about whether or not the government's run out of its own money. And as the crisis in healthcare and the crisis in the environment deepen, we don't have a lot of time. I think it's really important to anybody interested in wanting to make change to be able to answer the "how are you going to pay for it" question in a substantial way. And that substantial answer is modern monetary theory. And market practitioners who get paid to be right know this. So this interview with Kevin was recorded in September 2019. So we talk about Brexit as if it's possibly going to happen. And with the benefit of hindsight, we're still in the same position. It might happen. It might not. Who knows? There's a link to Kevin's Practitioner's Guide to MMT in the show notes. And there's also a link to free tickets for my live MMT show that I'm doing in London on the 3rd of December 2019. Thanks for listening, and thanks for the time you've put into understanding MMT. Here we go. Okay, so we've talked about how MMT works. We talked about how the descriptive part of it. When you get your angry pushback phone calls. I mean, pick your favorite. Just tell me some of the pushback.
Yeah. Why do finance types? Well, first of all, I agree with you that the finance types are the absolute worst in terms of pushing back on MMT, and I just
I mean, I wouldn't say they're the worst at all. In fact, I wouldn't. In fact, we have trouble with Marxists. We have trouble with everybody, and so it's not even. I wouldn't even say that. And of course, we only get to hear from the really vocal ones anyway on any side of it. So I don't think they've just got a particular kind of flavour, haven't they? Really.
Well. And you're right that I have seen some pretty ugly debates amongst the kind of academic community, and I'm shocked at that as well. Yeah. I'm actually I chatted with Steve Keen the other day, and we were talking about things, and I was saying I thought us traders were miserable to one another, and you guys seem to be even worse because they seem to, and not only that, the things they're arguing about, I'm like really, what does it matter? I have a saying when for traders, I always say, eventually you hit a point where you're just like, I'll meet you in the machine, meaning that you have a trade. And I'm always perplexed at the fact that people get so upset with people with different points of view, because you need someone to trade against. If we all thought the same thing, there would be nobody to have a trade against. And so I welcome different points of view, because eventually, if I'm right, then I need them their misunderstanding is making the price of that security be wrong.
Yeah.
So I just don't get upset about it, and not only that. So I write this letter, and if you think about what makes a good letter and what makes a good call, if everyone agrees with you, then there's very little chance you're going to be right. So actually, the posts that are the most popular are actually the ones that are probably the least likely to make you money. And ironically enough, the ones that when I do a post and I say, this is what I think, if everyone takes the time to write me and tell me what an idiot I am, what a buffoon, that I got the trade wrong, I almost always double my position because I know that everyone already has it on.
Did I see somewhere, this is my memory, which is not perfect by any stretch, but was it Warren Buffett that described his job as just spotting mispriced things?
Yeah, I think it might be, there's a very famous guy, Grant, what's his name? His last name it's something Grant. Jim Grant. Jim Grant says the key to investing is what is it? Something like figuring out, getting everyone to agree with you about a price of a mispriced security later. You don't want them to agree with you today, because if they agree with you today, then the reality is that it's already priced correctly.
Yeah. Yeah. So, that's what surprises me about when you're out there in the Twitter sphere, and maybe you're arguing about MMT or, fiscal policy, monetary policy. Somebody always pops up with one of those Guy Fawkes mask profile pics going, buy Bitcoin. And you're like,
right.
why are you telling if everybody agrees on that? Again, it's like, well, surely you guys, have like secret knowledge that everybody has, and that's how you're going to make the money, but you're spilling the beans. Why are you even, it makes no sense.
They seem to harass Stephanie Kelton as well.
But it's always just the two, buy Bitcoin.
It's
like by the time you're recommending it, the horse is bolted. Right?
That's right. But the finance community seems to really dislike MMT. I think that some of it is that it is viewed as a left policy, even though, as we discussed, it could actually be a right policy. The other thing is that we've been taught for the longest time that money printing is going to cause inflation.
Yeah.
And one of the things that we haven't spoken about, and it's this idea of endogenous money, and everyone has a different way of discussing and thinking about it. But I'll tell you, the one way I like to think about it is actually from the bank's perspective, and everyone's like Warren Mosler said something to the effect that. If you imagine a set of parents in the front seat of the car, and then they put their toddler in the back, and they attach them. They give the toddler a steering wheel, and the toddler thinks that he's actually driving the car, whereas the reality is it's actually the parent in the front that's driving the car. And he says that that's what fiscal versus monetary is. And although I agree with them, I'm probably not as committed to that belief as he is, because I believe that monetary policy is actually very effective. It's very effective at one thing, and that is affecting consumers' willingness to borrow. So if you go and you lower interest rates in the States from 200 basis points, 2% down to 1%, if you were a company and you go and all of a sudden the bonds are that much cheaper, do you think that that's actually going to be the difference between you making a factory or not? I contend that it's not. And if you go look, the Goldman Sachs has got a study that says that a corporation's willingness to spend is actually not at all correlated to the interest rate. And in fact, recently it's become almost negatively correlated, meaning that as interest rates rise, it means that the economy is doing better and they are more likely to do. Because the reality is, if you're building a factory, regardless if you're paying 0% or 1% or 2%, if you have nobody to sell your widgets to, then it doesn't matter what the price of it is. So monetary policy is actually not that effective at affecting corporate behavior. But one thing it does do, it makes individuals borrow and speculate on real estate very quickly. Now, the reason that it didn't work in the States after the 2008 crisis was the reality was that credit was curtailed and there was no ability for individuals to go borrow. And not only that, they'd gotten hammered so bad. But if you look after the great financial crisis, that basically as rates came down across the world, real estate went straight up almost everywhere. And especially places like Canada, Norway, Sweden, Australia, where our consumer had an ability to borrow and was all of a sudden faced with these lower rates, the private sector expanded and kind of overtook the lack of fiscal. And that is why those countries have done so well. So anyways, back to my point about Warren's point. Although I understand his argument, I think that at times monetary policy is still effective, but it's effective at mostly the private consumer and mainly through the real estate channel. But back to the idea about this kind of, you've heard a lot of people say QE doesn't cause inflation because it's just an asset swap. And it's that kind of always sounds glib, and you're like, what does it really mean? And it's the idea that whether the private out in the financial system, whether it's held in the form of T-bills or T-bonds or bank reserves, it doesn't actually change the behavior of the banks. And the way I like to think about this is JP Morgan, if all of a sudden they have more reserves because the Fed has gone and bought T-bonds from their account, do you think that actually changes how many loans they're going to go out and create? Like, to me, it makes no sense, because the reality is that JP Morgan has a balance sheet constraint and they're lending against their balance sheet. They're not lending against the reserves.
Yeah.
So the idea that people still have this belief that banks are reserve constrained as opposed to balance sheet constrained is really, really, truly important. And this still permeates throughout a lot of people's thinking. Like, I was a big fan before I learned of MMT of Richard Koo. Richard Koo is a famous economist from Nomura. And when I went and analyzed his books and his thinking before, after understanding MMT, I said he's got almost everything right in that he understood the fact that if the government doesn't spend at a time when there's no private sector demand, that this will starve the economy. And he understood a lot of the things that MMTers understood. But the one point that he refuses to kind of adopt is the idea that coming out of the other side of this, that he thinks that as soon as the economy gets going, the fact that all these reserves are in the system is going to cause massive inflation. Yeah. And this is the point that I think MMTers will say, no, that actually doesn't matter. And because the reality is that those banks aren't going to lend because there's so much more reserves in the system. They're going to lend because there's actual real demand. And that's only going to be created through the fiscal policy.
Yeah. And the other thing we could just quickly jump in and say is, if anybody's new to this, that banks don't lend out reserves. That's the correct way to say it, right, Kevin?
Yeah, absolutely correct.
It's so it's not even like that's going to hit the pockets and the bank accounts of bank customers, of bank account holders anyway.
That's right. They're balance sheet constrained. They're not reserve constrained.
Yeah.
That's what dictates how many loans they issue, and their desire for and their own decision about how many good credits there are out there that they can lend to.
Yeah.
Sorry, Patricia, go ahead.
No, well, I had a question about this recently, and I wasn't sure how to answer it, because I was making exactly this point that banks are not reserve constrained, but they seem to tell me that during the financial crisis, banks couldn't lend out because there was a lack of reserves. Is this kind of accepted narrative of what happened?
Well, so I'm not the best guy in terms of the true plumbing. The reality, I would argue that during the great financial crisis, a lot of things happened that had never happened before. The euro dollar versus treasury bill spread exploded to highs that we've never seen. Banks didn't trust each other. They thought they were going bankrupt. Nobody was willing to lend to one another. The system was very precariously close to just imploding in on itself. So maybe technically during that, the depths of the despair, there was some problems with reserves. That could have very well been. I'm not really sure, but the reality is that on the whole, in a traditionally kind of functioning market, that they're not reserve restrained.
Right.
Okay, so let's come back to Europe for a second. So I think we can all agree that the right thing to do for Europe would be to change their rules about deficit limits
yesterday,
and it would have been the right thing to do all along.
Right.
Just relax them for the whole Eurozone, rather than go, Greece needs a bit more, so they've got different rules. Just go, look, these are the new rules for the whole Eurozone. I mean, what do you think to that?
Well, okay, so in terms of the Eurozone, I'm going to get her name right this time. Stephanie Kelton was Stephanie Kelton. She was and most MMTers understood the problems with the system right from the start.
Yeah.
And I think somebody told me that they read a Warren Mosler quote that he had said in 2001 or 2002, and they had read it in 2011, and they were absolutely, amazed at the level of precision about how he predicted the problems that the European Union would experience based upon the way they've set up their system. And so it's just yet another example of why MMT is so important in terms of understanding the true constraints about not being a currency issuer, right? And
he said it was even before the euro was launched, when they locked the currencies together. I think this is a Warren Mosler quote. He said they were in Ponzi from day one.
That's right. That's a great line. That sounds like a great Warren line. Yeah.
Have you read Bill Mitchell's work on this as well?
No, well, I haven't. So I haven't read all of his stuff. Like for me, I just want to understand the constraints and what's going to happen. And so when you say that. So I guess your question was, we all agree that they should do more fiscal, and the question is, how do they go about doing it? And I don't have the answers, but I think that what you need to kind of just understand is that you have to watch for signals that they understand that this is their problem.
Yeah, well, no, because they absolutely don't. Or maybe you're seeing something different now from Christine Lagarde.
So I think the reality is that they didn't put in another kind of ivory tower professor into the ECB seat. They put a politician in, and to me, I think you put a politician in there if you're looking that you realize that the next thing is going to be a negotiation, and it's not going to be just kind of picking an interest rate from a DSGE model, which is what's happened so far, right? Yeah. And I look at it and I think to myself that Lagarde might signal, and I hope that I'm not talking my book, but she might signal kind of an understanding that we've entered into a new period where monetary policy is no longer going to be enough, and that the real next part is going to be negotiations on a fiscal level.
Mm-hmm. Okay. Okay.
But I just don't see, I might be wrong, I might be naive, but to me, if the Germans let everybody spend tomorrow, I don't see why they can't have a special, one-off, everyone's going to be able to spend, 5% of their GDP
the
of
politics
whatever.
Get in the way. That's the problem.
Yeah, no, I get it, that politics get in the way, but until they understand that, that this isn't working and that they have to change, and that's the one thing you got to be watching for, and to me, it's becoming more and more clear. I saw the CEO of Deutsche Bank the other day saying, if you take our rate and you offer from -50 to -60, do you think any corporation is going to go, geez, I was just waiting for the last 10 beeps before I, took out a loan? There's not a chance. So I think they are understanding that all it's doing is crushing their banking system. And I think that we're getting increasingly close to the point where they realize that monetary policy can't work, and in fact has not only become not effective, it's become counterproductive.
Mm-hmm.
It's really difficult to predict how much time they have as well. I mean, Germany is in recession at the moment. Could they have a crash tomorrow? I mean, are we talking this imminent?
But like a crash in what way? In some ways, we've already had it. They've already I don't know if we're going to have a crash like that. I think it's more of the just continued crappy growth. And to me, I'm not sure we are going to have crashes going forward because of the fact that the governments understand QE and they understand how to prop up asset prices. What they don't understand is how to make real economic growth. And to me, the next problem is not going to be a market crash. The next problem is going to be people revolting because they've finally had enough of the Gini coefficient going to 1930s levels, and they've decided that this enough is enough. And young people, and rightfully so, are going to say, screw it. Why am I sitting here, paying all this money to an old person that is holding all the assets and lecturing me how, that we have to be prudent and not borrow too much? Because let's face it, that generation already got us into this amount of kind of indebtedness up to this point, and then they're the ones telling us that we can't spend from here.
Yeah.
And so I worry about the next problem is going to be a clash between generations, and it's going to be a political clash as opposed to a market crash. And that's what I'm worried about more so than kind of than a stock market like getting absolutely devastated or another 2008 kind of event.
I think the thing that I don't know, my concern, and I'm not ever so plugged into this, is that they went in Spain and in Greece, and they went very progressive. They went very left wing, and they Syriza. They had
and even Italy.
And they had a mandate, and that has failed. Those leaders have failed. Yanis Varoufakis got out at the right time, I guess. It was just like, well, if we can't stand up to the ECB and the IMF, we're not headed anywhere good. So I'm thinking they're going to be looking at. They're going to be looking at that and going, we've tried it that way. Let's vote for whatever they're called now, golden whatever. They've swung left. It's not working.
Golden Dawn.
But they've always got some sort of name that makes them sound like a box of chocolates or something.
Exactly.
They're actually the opposite.
They're charming. They're very charming.
They're the opposite of a box of chocolates. And so I rather than there being any kind of grassroots progressivism starting, it's like that's already been, and it's come up against the institutions, and it's not overthrown the institutions. So the next move is going to be hard right. That's what I worry about.
This is the thing that a lot of citizens in various countries across Europe, you can talk about Greece, Spain, Cyprus, Italy, but they've kind of already realized that things, that the fiscal side is not working, but so far there is a lack of recognition from politicians and people in charge of the EU, and there's a resistance to it. And my worry is that this is going to get mixed into kind of a sense of helplessness that people across Europe are going to be completely disillusioned with their political establishments, and God knows what comes up.
Yeah, then they come out the other side of that. They don't just go, "Oh right, it's over," just cut my throat.
You have the Gilets Jaunes in France, which is a manifestation of that, I guess.
So you guys understand the political side of it much better than I do. I kind of take a little bit. I kind of look from 40,000 feet and think to myself, Germany thinks that they are the solution, whereas they're really actually the problem. And not only that, they don't understand that. What's that line that if you borrow 100,000 from the bank and you can't pay, you got a problem. But if you borrow 100 million from the bank and you can't pay, they've got a problem. What Germany doesn't realize is that even though there's not there's the debt that they own from these different countries has made it so there is no getting out for them. There's something called the target to imbalance, which is the amount that central banks in Europe lend to one another. And most people don't I don't know if most people don't realize this, but a lot of people don't realize that there still is a Bank of France, and there still is a Bundesbank, and there's all these different countries still have their own central banks, but they just go and they get all their liquidity from the ECB. And so Germany goes and they actually have all the savings, and so they have gone and taken their money and they've lent it out to the Bank of Italy. And so the Bank of Italy is a huge creditor to the Bank of Germany. So the reality of Germany escaping from this is so low, and the longer they continue down this road, and the longer that they go without being productive, because there's all these people that aren't working, and all the things that we understand from an MMT perspective, how the society could be so much better. Mm-hmm. But the longer they go down this road without that, the worse off the problem is going to be, because there's all these periods of more indebtedness that they're going from between the two countries. And it's just getting more and more intractable, and it's getting quite scary. And I just think that I'm hopeful that one of these days that they're all going to just kind of look at the sheets. They're going to go and, Stephanie and Warren are going to get there and explain to them, and they're going to realize that doing it this way isn't going to work, and they're going to figure out a way to go out and have some fiscal stimulus. You know what I think is really interesting is Germany's getting mad at Italy, and their budget deficit as a percent of GDP is 2.5%. So that's what they're getting in trouble for. And if we go look at the U.S., and we were just talking about how great it was, Trump's budget and how well it did for their economy, they ran a 4.5% of GDP deficit. So the numbers that the Brussels is kind of instituting on these member nations it's choking growth. And the quicker they understand I think that Bill Mitchell or Randall Wray or Stephanie should go there and explain to them that they're the cause with this fiscal austerity for the poor growth.
So coming back to the States, I read something recently by John Harvey on his Forbes blog. He was talking about, look, the inverted yield curve in and of itself doesn't always necessarily signal inflation, but he pays attention to another index at the same time, and I think it's I'm not going to say it right, but it's the capital formation type index. Like, that's down basically. Like, businesses are spending less on factories, on real things, and he says when that indicator turns down at the same time, those two things together, and you add in the trade war, that does signal to, he's saying that does signal to me that we're looking at we're looking at a recession. Right. What do you think to that?
Okay, so when you said inflation for the yield curve. The yield curve
sorry.
Yeah. No, I know you meant recession. I just, in case anyone's listening and they want. Yes. So typically, an inverted yield curve means that there's a recession coming. There's been very few cases where it's gone inverted that it hasn't actually caught. The recession hasn't followed. As a trader, you learn to never say never, or this time is different. And I just think to myself that this time might actually be different. And I kind of I cringe as I say that, but it actually might be. And the reality is that with these crazy monetary policies that we're getting out of Europe, I think that a lot of the rush into U.S. fixed income is being because of these dumb policies out of Europe. So I'll give you an example.
Sorry, just a quick, when you say rush into fixed income, you mean buying government bonds, yeah?
That's correct.
Yeah.
That's correct.
Yeah.
So in August was, I think, the largest kind of the best performance of the U.S. government bond index since 2008. All right, I don't know the exact stats, but something like that. So the reality is that we've had a rise in U.S. bonds that has been, on par with what happened in 2008 when banks were on the verge of going belly up, when there was like 15% or 12% unemployment or whatever the number was, when we were worried about the system not kind of working. And yet here we are, and unemployment is, basically sitting at the lows. The stock market's doing well. Yes, there's some economic slowdown, but to the rush into bonds has not made any sense compared to what we actually see in the real economy. Now, it could be that the bond market smells something that's really bad out there, and that we're about to roll over really hard, and that the economy is about to slow down. That very well could be, and that that the bond market is often the smartest of all the financial instruments. That people say that they always, if the bond market or the stock market are disagreeing, you always go with the bond market because they seem to be a little smarter than the stock guys. But I can't believe that this sort of rush into this bond market is actually, given the fact that things aren't that bad from an economic point of view, that it isn't just more of an aberration due to the fact of these negative rates. Mm-hmm. We take for granted now, like everyone talks about like Bund at minus 50 basis points, and it seems like no big deal. But like, just stop and think about negative rates. Like if 10 years ago someone had said to you that the Bund was going to trade at negative 50 basis points, you would have told them that they were nuts. That there's no way, bonds should never trade negative. There's just no way that could ever happen. Mm-hmm. And yet here we are, and we've kind of been like the frog in the boiling water. We've accepted this, and we somehow think that this is now normal, whereas it's anything but normal. Like I contend that this is, I've been saying this for a bit now, that we're in a huge bond bubble, and I don't see how you can't refute that. By its very definition, a bubble is when you buy something with the hope of selling it to some greater fool. Because there's no way, if you buy a Bund at minus 50 basis points, that you're going to make money. You're guaranteed to lose. You have to lose if you buy this. The only way you're going to make money is if you sell it to somebody at an even more negative rate. And yet we all sit here and seem to think that this isn't like a big deal, and like we just kind of blindly go about it. And I say this is a huge kind of abnormal period in time. And I think we're going to look back at this and wonder what the hell we were thinking, that we're going to be just like going amazed that we thought we could never create inflation. And I actually think that if I'm putting on my trader hat or my portfolio manager hat, that you're going to look back and you're going to wonder like why most people didn't take this opportunity to sell every bond that they owned in their portfolio, because there's very little chance that you're going to be able to make money at bonds at this level. And so back to your question about the yield curve, yes, it very well could be that a recession is upon us.
By the way, the other indicator that John was talking about was the real gross private domestic investment indicator.
Yeah.
Yeah, he was saying that's turning down as well.
Right. So this is the other thing I believe with our with my understanding of MMT. I actually look at a country like China, and I realize that they're able to control their economy much more than we ever were able to control ours. And I think that if we were to accept that there's no financial constraints, but merely just real resource constraints, we could actually arrest any sort of decline in the economy very quickly. I think the ultimate problem will not be from stopping kind of downturns. I think that the real problem will be when it gets abused on the other side.
Right.
So that's actually what keeps me up at night, like in terms of thinking about all this. But like, imagine we're sitting here and we're saying, oh, there's all these indicators that are showing the economy is about to roll over. Well, yeah. What if Europe and the US and Canada and Australia all got together and said we're going to spend 5% of our GDP in kind of deficit spending tomorrow? It doesn't mean that the bond, like, I just don't think a recession would come. Now, you might argue that it's putting it off, and you might believe some different things, but I don't think that those things have to be that way. So yes, traditionally that has been what's occurred, but I worry about that, and I worry. So A, I think they could fix it if they wanted to, and then B, I worry about whether the signal is correct given the fact that there's these crazy stuff happening in the European bond market.
Yeah. And when you look at the UK, and there's just all we've got is it could be a permanent state forevermore, uncertainty because of Brexit, because we don't know whether we're going to whether Boris Johnson's going to be able to enact his no deal.
Have you heard of Brexit, Kevin? Is it a thing there?
And reading this is, nobody's going to be able to answer this question, so I'm going to ask you, Kevin.
Okay.
Reading the tea leaves, what do you think's going to happen over here?
So I don't think it's as bad as everyone thinks it is, and for me, I'm always interested in what is priced in to the market. And at this point, I would argue that there is so much bad news priced into the market that you guys should just get it over with regardless. Figure it out. So I agree that one way or another, you should just figure it out. But that the downside from here isn't as much as everyone thinks. I just look at the fact that the pound is actually rallying. Like it's doing better. I think that maybe if you have a hard Brexit, it goes down from here. But I think you guys have already priced in the worst, and that you should just kind of get on with your lives somehow. And I don't know, like I don't have an answer for you. And for me, I'm always interested in what the markets are going to do more so than like what the economic or political ramifications of stuff. But I just think from a market perspective, if you do have a hard Brexit, yes, it will probably be bad, but it won't be nearly as bad as the doomsdayers are telling you it will be.
So planes won't fall out the sky and...
That's correct.
To play.
Yeah. I think what I was asking there was more like I'm just worried that how you said you guys should just get on with it, and I'm like I was back. My birthday was the 29th of March. And that was the day we were supposed to go. Now, I voted Remain as well, but by now I'm like, let's just end the uncertainty. Let's end it. But I'm thinking that this whole, just this Punch and Judy show that's escalated since the referendum, I think it's really working out for some people. You know how we used to, in politics, we used to just have conversations like, well, we can't do X or Y or Z because we've got to fix the deficit first. And X and Y and Z were always progressive policy initiatives. And there was always this boogeyman, the deficit. Now we can't do X, Y, and Z because of Brexit, because we haven't sorted this out. And it's all we've got to talk about. And I just think that's really suiting a lot of people right now. And I'm thinking, how long can they keep this going? I think they can keep this rumbling on for a long time. This sort of twilight zone. So, given that position, what do the markets do?
So you're not as hopeful that they're going to solve the problem, like that they're just going to and you're almost thinking that this
have you seen them?
This could be the new normal, like just put back of just
they're planning on delaying it for another 6 months or something, 2 years.
It
could be. Do you see what I'm saying, Kevin?
Yeah. Well, first of all, you had kind of implied that there's a nefarious person that's almost planning on this.
No, not at all. No, I'm just saying, like, I think on aggregate, the way the whole the political ecosystem seems to be working, it seems to be like that. That it's great. It goes over great on TV.
They're just two sides fighting to the death.
Everyone's a pantomime villain in some respect. It's just making for great theatre. Like the Trump presidency makes for great theatre, and we're all looking at that.
I tell you what, it's like a bunch of people stuck at a doorway, and nobody wants to walk through it.
Yeah, there's a very Canadian problem, that one. So I kind of laughed, though. I'm a big believer in Hanlon's razor. I don't know if you've heard of that.
No, I have not. That sounds great.
It says, never attribute to malice that which can be adequately explained by stupidity.
Yeah, that's a good quote.
And I really, I think that it's like, I don't think it's malice. I just think that it is stupidity. And that eventually there is going to be a point that it'll just, hopefully you'll figure it out. I'm probably not as pessimistic as you guys are that it'll get solved, and it's because I don't have to deal with it every day like you guys do. I think that there's no doubt that you guys are looking like you're a little bit of buffoons recently, but let's just face it, you guys.
That's the least of our problems there. I mean,
you still pale in comparison to the other president out there.
Down south from you.
So I don't know. I'm hopeful that you don't do that, but you're absolutely right, Christian. If they go and if it drags on, you're gonna again, just like Europe going along with their monetary ease and their fiscal austerity. The longer it continues, the worse off you are. And this is when I had a talk the other night with some fellows, and you know what's interesting? Actually, we're talking about how much finance guys hate MMT, or how many of them hate. And I did mention that there was some that have been using it for a while. But I will tell you this: I went out for a dinner, and it was a bunch of very senior portfolio managers at Canadian pension plans, and there's kind of, let's just call it, some sympathetic few in there that are MMT, kind of willing to accept some of the MMT things, and they got together and we had a great dinner and chatted about things, and I'm finding that more and more of people are kind of realizing that MMT and a lot of these things have some benefit, and I'm still hopeful that Europe's going to figure it out, and I'm hopeful that Britain's going to figure it out, and we're going to start, because I think that we're seeing for the first time people starting to embrace the idea that this current system isn't working, and I think that you guys will figure it out as well.
Okay, well,
yeah. Hopefully, one day.
The one thing I wanted to say is that when we were talking yesterday about this is that with all these fellows, is I said I have this line that I always say that bar rules apply, and bar rules are like you punch first and you punch hard, and and one of the things is, if you look at the devaluation of countries in the 1930s during the Great Depression, they eventually all devalued, but the ones that devalued first ended up being the ones that did best economically. I really wonder if what's going to happen is somebody is going to go out and really truly embrace MMT, and whether that's a Sweden or maybe you guys. What if you guys did it? You guys, all of a sudden you have a hard Brexit and you say, well, this is what we're going to do. We're going to do MMT, and I think whoever does that first will, experience tremendous growth, way more so.
Again, this is sorry to cut. This is why I said.
No, go ahead.
This is why I said I thought like the market practitioners and people who were kind of right of center would embrace it first, because they would see that like this is this is just the way to go. Again, the person that does this the first is gonna win. Right. We want to win. Yeah.
So there are these people here as well that say that actually that traders and actually like things to go bad, and that they're pushing for Brexit because they want to bet against the UK. Is this true?
I don't know specifically about that, but there are definitely times that traders want things to go bad, and that they use their pulpit to influence and to make things seem worse than they are.
Right.
100%.
Okay.
So they exacerbate.
Whose razor should we apply to this?
They are actually, you can attribute
actual malice,
but you can attribute financial gains. By the time they go out, and if you get a big time hedge fund manager talking about a position, and especially a guy that doesn't generally talk about positions and is not in the public eye all the time, you have to kind of ask yourself, why is he doing that? He's not doing that and then going to buy after he makes his announcement. The reality is that he's bought or sold already, and he's fully in, and he's trying to push things his way. And there's no doubt that traders will try to. They don't view it as quite as nefarious as we're trying to make it out. They view it as they're enlightening the world about where this thing will eventually have to go, anyways, right? But they go and they might.
We should be thankful.
Yeah, they're humanitarians. It's like there was the CEO of Goldman Sachs. He stepped, he had a terrible misstep after the great financial crisis when he said he was doing God's work.
Oh my word!
And he's forever just kind of, everyone would always say, "There's Goldman Sachs again doing God's work." Anyways, so you just have to assume that these traders they have a position and that they're trying to influence things, especially the big ones. We've seen this with China, that some of the traders that are most vocal against China or talking about the problems in Hong Kong most likely will have positions on to benefit if that gets worse. So it'll be the same in Britain, in that there will be people that view it as inevitable that there's a hard Brexit, and that they will have positions on that will be shorting that, and they have no moral qualms about that, because they're just arguing that they're making the market more efficient. Because if they and listen, I'm actually sympathetic to some extent to this. Let's just assume that you're going to have a hard Brexit, and that there's nobody is pricing in that ahead of time. That means that at the time that it happens, it has to go from being zero priced in to fully priced in. So it makes the actual move all the greater. So having them there to sell it ahead of time and then buy it back later makes it so that it's more kind of, the change isn't as great and it's not as jarring. So I have no problems with fair markets where people are allowed to express their views and take and put on trades based upon what they think is going to happen, because ultimately it makes for a better kind of market, and it also leads for a smoother system.
Okay.
And this is like Warren Buffett always says, that like he has no problem with people short selling his stock. He says, because I know they're gonna have to buy it back later. And not only that, if you think about let's just take an extreme case where there's some fraud. And let's have two examples of the fraud in a company, and take something that's overstock, let's just say, because I think that I better not use a specific stock. But anyways, so let's just take there's this stock that people view as a promotion, and let's take two examples: one where that we're allowed to short sell, and one where there's not. Without short selling, it's actually easier for the promoters to put the price of that security higher and higher. So which means that they will actually, the people that buy based upon this promotion will end up getting hurt worse than if they would have had allowed short selling, and the short sellers would have been allowed to keep the price more contained.
Right. Okay.
Right, so it's short selling it's not like there's something immoral about short selling, and it's actually does make for a better market. It makes for a better I actually believe it makes for a better society. Now I realize I'm talking about this on an MMT podcast. That's not going to go over well too well, but I do believe that
this is fine,
that having those free markets and having the price discovery makes for a better system.
Yeah. Well, no, I mean, I'm on the Warren Mosler side of things, where it's like, look, it doesn't, MMT means, unemployment means the deficit's not big enough. You can increase the deficit two ways. You can cut taxes. You can do fiscal, and and also to help with that, Warren says the job guarantee should be in there to reduce tendencies to labor bottlenecks and stuff like that. So it's like I've always been very much like It doesn't have to be a left-wing thing at all. But at the same time, you listen to our podcast. We don't shy away from the fact that we're left-wing, and I don't, and that's fine. And that's why I was, and one of the many things that drew me to MMT, because the first time the light bulb went on for me, I thought, well, here's where we can all agree. Here's it does cross the divide. But so when I'm out there, sort of looking at conversations about MMT on the internet, and I see somebody, from the other side of the spectrum to me, ideologically, I often recommend your posts about MMT, and I also
that's what I'm going to do from now on.
Yeah. It's great, and but then you messaged me and said, I love all these angry traders you keep sending my way. I was like, so I'm sorry if I've given it.
My God, it's Christian's fault.
Yeah,
all the time.
That's right. Yeah. No, it's okay.
I'll link to the piece and, without tagging you in, and then at least you don't have to take the crap from the Twitter.
It's all right. That's what makes a market. You know what? Yeah. Everyone's allowed to have their different opinions, and as long as people are civil about it, I have no problem with people taking the other side of my trade. That's important. That people are there to get it wrong. And one of the things that I'll say straight up is that I was I believed I was right before I understood MMT, and then I came upon MMT and realized many of the things that I thought were right were actually incorrect. And who knows? I might be wrong again in a new way.
Yeah,
I have a tagline that says, "All I do is bring 25 years of mistakes," that's kind of one of my things. The trader has to stay humble and stay willing to kind of open to new ideas, and that's ultimately though why I was attracted to MMT, because I feel like I'm not burdened by these beliefs that I know all the answers. And when I stumbled upon these people that actually, pretty obvious to me, proved that they had all the answers and explained what I was seeing in the markets, it was just such an attractive proposition that I couldn't help myself.
And to quote a famous lefty, Chomsky, who actually says, I quite like a quote, I'm going to paraphrase it, it just basically says that we don't actually know what a perfect system looks like, but we know the next step where we need to go from here. And then, and then once we're there, we can figure out what else we need. So I'm all up for that.
So that actually,
I'm gonna steal that. That's a great line.
that actually ties in with something that Cory Doctorow is big on, heuristics rather than, So the difference between and Seth Godin, the business writer, he says, I'm in the business of compasses rather than maps.
Right.
We just need to figure out what's better than where we are, and then maybe from that next place we can maybe see another better place and just keep the whole thing moving.
And it's, to me, it's so obvious that the current system is not working, and that this is such a better step going forward. And I just don't, like, a lot of people will say, but it'll create inflation down the road, and there's all these problems. I said, let's deal with those when we get there. For now, it's by far a better solution. And not only that, I'm pretty sure that if we continue on the current path, that it's going to eventually be real problems, because it's not serving people. And I'm really sympathetic to Stephanie when she says, to the effect, like, there's people out there starving, there's people out there who need work, and the fact that we as a society have the ability to kind of fix that and we're not doing it is just it's a great tragedy. And I really do believe that we should be heading more down that road. And actually, while we're chatting, I just want to say one thing. I've listened to your podcast. I love it. And I want to just thank you guys for taking the time to do this and for teaching people. And I think it's terrific. And I often kind of contrast in my mind people that are on the other side that are busy screaming at me that this isn't going to work and stuff. And I ask myself why they're so strongly feel that way, and are they truly trying to make the world a better place? And I have zero doubt in my mind that when I listen to your podcast, that right or wrong, you're doing it for the right reasons, and that and I hold that way about most MMT people, is that they're doing it for the right reasons, that they want to make the world a better place. And I think that everyone should be commended for that, and you guys especially.
Oh, thanks,
Yeah,
Kevin.
that's lovely. Thank you, Kevin.
Well, maybe that's a wonderful note to bow out on then.
Okay.
Is there anything that you would like people to look at before we go? Anything we've not covered?
No, I think that's great. You guys can go check my blog out at themacrotourist.com. I do a lot on Twitter as well, so you can go at Kevin Muir, M-U-I-R. And just thanks for the time. It's been a pleasure chatting with you, and I look forward to all the new angry hate mail I'll get from the MMTers now.
Yeah, so on
welcome
Twitter,
to hell, mate.
On Twitter, you are the macrotourist on Twitter.
Well, no, it's actually the one that I use. The one I use mostly is at Kevin Muir.
Oh, okay.
And
I was following the other one. I was following the wrong one.
Yeah, no, you know what? I should really. The other one just has the posts on it, but the at Kevin Muir is the one where I actually talk and engage, and it's a lot of fun. Twitter's one of those things. It's a little bit of you can go down the road of wasting too much time on there, and not only that, some guys, I'm just shocked at the amount of arguing that goes on. I try not to argue, but I do try to have some fun, and one of the things is that my writing, I try to make it a little bit more fun and interesting, and you'll see that if anyone goes and reads it. I hopefully don't take myself too seriously, and life's short, and nobody gets out alive, so we should all have fun while we're here, and I try to reflect that in my writing.
Yeah, right. And you do that, yeah. So we'll just spell your name as well. I'll do it in the intro as well, but it's Kevin, as you'd imagine, and Muir is spelled M-U-I-R, and that's all one word, isn't it? At Kevin Muir for Twitter?
That's correct.
Great. Okay. All right then. Well, it was an absolute pleasure to talk to you. I don't know. Maybe one day it would be great to have you back on and just really walk us through some of the. Some of the terminology that I find very dense when I start looking at finance bloggers, the jargon and stuff. I'd love to talk through that with you at some point.
For sure. Listen, if you ever stumble upon something and you want some help understanding it, feel free to reach out. I'm more than happy to kind of say, oh no, this is what he means, or like, don't feel like there's any question that you can't ask me. One of the things that I do, I actually am a little bit better at than some, is that because I call myself the macro tourist, it's actually a derogatory term. It's usually traders use it for people that wander into a particular square without knowing anything about that one particular kind of financial type of asset. So it's like when someone comes in there, and one of the things is that my knowledge is actually a little wider than some. So like some guys will be equity guys and they'll only know equities, or some guys will be bond guys and they'll mostly focus on that. One of the things that I like to do is to try to do all sorts of different assets classes. So I'm more than happy to kind of walk you through and help you with anything in terms of the finance that you might have trouble understanding.
Oh, thanks so much, Kevin. It's been great to talk to you.
Terrific. Well, thank you very much, guys.
Cheers, mate.
Okay.
Thanks.
Okay, bye-bye. Thanks.
That was the MMT podcast with Patricia Pino and Christian Riley. Don't forget, you can support the show through Patreon, starting at $1 a month, and get access to patron-only episodes. You can do that by going to patreon.com/MMT podcast. You can also find me on Twitter at MMT podcast, and you can find Patricia on Twitter at Patricia N. Pino, and you can email us at mmtpodcast@outlook.com. Thanks for listening, and we hope to hear from you.